XRP just hit a 6-week low, with whales basically disappearing from the market. But here's the twist. The AI is screaming a 99.9% chance of massive upside ahead. Let's break it down. All right, everyone, here's where we are right now. XRP is sitting at $1.3269, and it's not pretty. We're looking at a minus 2.90% drop in the last 24 hours. You know what I've noticed? Sometimes the worst-looking days are actually setting us up for the biggest moves. Now, here's something interesting. While the price is dumping, 300 brand new XRP wallets were created yesterday. That's not what you'd expect during a sell-off, right? Here's why this number matters. Our RSI is sitting at 39.03, which means we're getting into oversold territory. The MACD is still bearish at minus 0.0106, so the momentum isn't great. But here's the thing. XRP is trading right near that lower Bollinger Band at 1.3332. In my experience watching these charts, that's often where the bounce happens. We're also sitting way below our moving averages, about 21% down from that 200-day average. That sounds scary, but sometimes that's exactly where the smart money starts accumulating. So what moved the market today? Bitcoin ETFs just saw $1.26 billion flow out. Billion with a B. When Bitcoin sneezes, the whole crypto market catches a cold, and XRP has a 0.48 positive correlation with Bitcoin right now. Here's what's happening. Big institutional money is getting nervous about something, and they're pulling back across the board. But you know what? These macro sell-offs often create the best buying opportunities for patient investors. On the regulatory front, we've got some mixed signals. The FDIC just tightened compliance rules for stablecoin issuers, which shows regulators are still being pretty strict about crypto. Over in Brazil, authorities seized 400 Bitcoin mining rigs in some illegal operation. If this trend continues, we might see more pressure on the whole space. But here's my take. XRP has been dealing with regulatory uncertainty longer than most, so they're probably better positioned to handle whatever comes next. The mood right now is, well, pretty terrible, honestly. The Fear and Greed Index is sitting at 28, which means we're in extreme fear territory. Everyone's basically running for the exits. Some XRP community folks are still talking about $30 targets. But let's be real, the short-term sentiment is rough. Here's the thing though, extreme fear is often when the best opportunities show up. When everyone's scared, that's when you want to start paying attention. The big players are doing something interesting. Or actually, they're not doing much at all. We saw 330 whale transactions, moving over 540 billion XRP. But the news is reporting that whale activity is actually fading. That's a bit concerning for immediate price action. Whales provide liquidity, and when they step back, things can get volatile. But remember those 300 new wallets I mentioned? Retail is still coming in while the big money steps back. That's an interesting dynamic. In plain English, we're at this stage. Elliott Wave analysis puts us in Wave C, which is the corrective phase. Think of it like the final cleanup before a new cycle starts. The Wyckoff method suggests we're in an accumulation phase with about 44% confidence. So basically, we're in that messy middle part where prices shake out weak hands before the next big move up. It's not fun to watch, but it's a necessary process. So what does the AI think? This is where it gets really interesting. The AI ensemble model is giving us some pretty bold predictions. 1 day out, $1.4841 with 65.6% upward probability. 7 days, $1.5705 with 63.3% upward probability. But here's the kicker. 30 days out, $2.3744 with a 99.9% upward probability. Wait, 99.9%? That's basically the AI saying it's almost certain we're going significantly higher. That would be about a 79% gain from here. But here's what could go wrong. Those fading whales are the biggest immediate risk. Without big players providing liquidity, we could see more volatile drops. Also, there's apparently critical levels of leverage built up in XRP right now, which means forced selling could push us lower. And if those Bitcoin ETF outflows continue, the whole crypto market could stay under pressure. Don't forget about regulatory tightening either. That could create ongoing headwinds. Here's my take. I'm calling this a cautious buy, but with a gradual accumulation approach. The AI's 99.9% confidence for the 30-day upside is pretty compelling, and we're sitting in technically oversold conditions. Entry points. I'd start buying between $1.30 to $1.32, with a second entry zone at $1.25 to $1.27 if we drop further. Stop loss at $1.20. If we break that, something's really wrong. Targets. First target $1.48. Second target $1.57, and if the AI is right, we could see $2.37 longer term. The risk-reward here looks pretty good, especially with that AI confidence level. That's it for today. The market's scary right now, but sometimes the best opportunities hide in the fear. If this analysis helped you make sense of what's happening, hit that subscribe button and give it a like. I'll be back tomorrow with more data and insights. Stay safe out there, and remember, never invest more than you can afford to lose. See you next time.